Welcome to the deep dive. We're here to unpack the stories behind the headlines and really give you the insights that count. Today, we are navigating the current stock market. It's throwing up some interesting situations, especially with these so-called breakout growth stocks.
Mm.
After that dip more than 10% earlier in the year, the big indexes, S&P 500, NASDAQ, the Dow, they're bouncing back strong. Yeah, it's sitting just, 2% to 6% below their all-time highs right now. So our mission today is to really unpack two specific companies from our source material, breakout growth stocks, Spotify and Roblox Soar. And the goal is to pull out the key insights for you to help you stay informed.
Yeah, absolutely. And it's a great time to look because it's not just about the numbers on the page, right? It's digging into the why. Why are these specific companies performing this way? And connecting that back to the bigger picture of what's driving growth in the market today.
Right.
Especially in this digital age, the whole idea of what makes a company a breakout is definitely shifting.
That's a great point, the why. So let's dive in, keeping that perspective. First up, Spotify technology. And then we'll look at Roblox, which is, like you said, a fascinating contrast. Okay. Spotify. Kicking things off here, anyone watching the stock knows it's had an amazing year so far, up over 58% year to date, and it's hovering right near its all-time high. Now, that big push came after a really strong Q1 earnings beat. What's that breakout performance really telling us about their current growth drivers?
Well, what's really interesting is how their core drivers aren't just growing, they seem to be accelerating where it counts. So in Q1, their monthly active users, MAUs, they climbed 10% year over year. That's huge, up to 678 million users.
678 million, wow.
Exactly. But here's the kicker for the business model. Premium subscribers, the paying ones, grew even faster, up 12% to 268 million. And this isn't just a one-off thing. If you zoom out, look at the last 10 years, Spotify's MAUs have gone up roughly tenfold.
Tenfold?
Incredible. From about 68 million to that 678 million we see now. It shows, real consistency. Their revenue engine isn't sputtering out, even at this massive scale.
That kind of consistent growth at that size is pretty remarkable. And it does bring up that revenue model question. Like, most users are on the free ad-supported tier, right? But the money, the vast majority, comes from paid subscribers, about 90% of revenue.
That's right.
So converting free users to paid seems like the core strategy. How do they manage that? Is the free tier just like a funnel?
It's definitely a massive funnel, yeah. But it's more than just a loss leader. It hooks people, gets them used to the platform, starts personalizing things for them. The trick, the strategic tightrope, is balancing making money from ads on that free tier while making the premium tier really compelling. No ads, downloads, better sound.
Right, the value proposition.
Exactly. And Wall Street's definitely noticed they're pulling this off. Jefferies, for instance, they just raised their price target for Spotify stock quite a bit, from $730 up to $845.
Okay, and what did Jefferies point to specifically?
A few key things. Better than expected user growth was one, especially strong growth coming from emerging markets. That's a huge area for them.
Untapped potential there.
For sure.
Yeah.
And also higher ad rates. So that free tier is actually monetizing better too. Plus, Jefferies mentioned potential boost down the line from, say, price increases on premium and also finding more cost savings.
Okay, so user growth, monetization. But what about technology? We hear a lot about Spotify and AI, things like the AI DJ, natural language search, AI playlists. How important are these AI features for keeping users engaged long term? Is it more than just a gimmick?
Oh, I think it's absolutely critical. It's becoming their competitive advantage, their moat, you could say. These AI features, the DJ, the smart search, the personalized playlists, they aren't just cool tech. They personalize the experience deeply, like really deeply. And that deep personalization drives engagement. People listen longer. They're happier with the service. And for a subscription business, that stickiness is everything.
Reduces churn, makes it feel essential.
Exactly. It's why they can keep converting users and why analysts are pretty bullish. So you've got this mix, consistent user growth, strong financials from that conversion strategy, and this forward-looking AI integration. It makes Spotify, pretty compelling story for growth investors.
Right. And the source material mentioned dollar cost averaging as a possible strategy.
Yeah, the idea being you invest a set amount regularly. It takes some pressure off trying to perfectly time the market when buying shares. And just for context, we're talking a market cap around $143 billion with a gross margin near 31%. Pretty healthy numbers.
Okay, interesting. So Spotify's story is clear. User growth, conversion, AI driving stickiness. But let's pivot now to Roblox. Also making headlines, shares up, 78% year to date? That's huge. But they operate very differently, especially when it comes to profit. So what's fundamentally driving their surge?
Yeah, it's a completely different beast. In a way, the main reason for Roblox's recent surge seems to be improving fundamentals, even though they're still reporting net losses. So in Q1, they actually beat analyst estimates. They reported a loss of $0.33 per share,
Okay.
which sounds bad, but the expectation was actually for a bigger loss, around $0.45 per share.
Ah, so better than expected, even if still a loss.
Exactly. And for growth investors, looking at these early life cycle stocks, beating expectations on a loss can be a really positive signal. It suggests, maybe they're moving in the right direction, getting more efficient.
Right. But still, a net loss is a loss. And Roblox has struggled with quarterly profits since, 2021? But I guess, like you said, for an early stage growth stock, maybe profits aren't the only thing that matters right now. Growth is often prioritized.
That's often the case, yes.
Yeah.
At this stage, investors might focus more on things like user growth, revenue growth, engagement. Are they capturing market share?
So how does Roblox manage that? Operating in the red but still investing in growth? Are they burning through cash?
That's where you look at the balance sheet. And Roblox actually looks pretty solid there. They have about $2.7 billion in cash. Debt is around $1.8 billion. That's manageable.
Okay.
And crucially, they generated about $1 billion in free cash flow over the last 12 months.
$1 billion in free cash flow,
Yeah.
even while reporting losses.
Yep. So they aren't facing a cash crunch. The operations are actually generating significant cash they can plow back into the business, into growth, despite the accounting losses.
Got it. And what about those core growth metrics then?
Also strong. Revenue is up 29% year over year in Q1. And bookings, that's the money people spend on Robux, their virtual currency, that was up 31%.
And bookings are a key indicator, right? Like future revenue.
Exactly. It shows users are highly engaged and spending money on the platform. It's a powerful metric for them.
Okay. And one really unique thing about Roblox is its creator economy. They announced payouts to creators were over $281 million just in Q1. That puts them on track for maybe over $1 billion for the full year. That's huge. Why is that number so important?
It's absolutely fundamental. Think about it. The more money creators can potentially earn on Roblox, the more talented game developers you're going to attract.
Right. It draws them in.
It draws them in, and they create more cool stuff, more engaging games, more diverse experiences. That brings in more users, keeps the existing users happy. More users mean more spending on Robux, so more bookings.
Which means more revenue for Roblox.
And potentially even bigger payouts for creators down the line. It's this virtuous cycle, a self-reinforcing loop.
The creator economy feeding itself, basically.
Pretty much. And that's a huge differentiator for Roblox. It builds this ecosystem where creativity pays, literally. So yeah, looking at Roblox with that increasing revenue, strong free cash flow, and this powerful creator dynamic, it's definitely a stock worth considering for investors focused on long-term growth.
But with the caveat about profitability.
Absolutely. It's not for everyone. The lack of consistent GAAP profits means it won't fit every investor's risk profile or strategy. And for context here, market cap is around $70 billion, so smaller than Spotify, and gross margin is about 27.5%. Different financial picture.
Okay, so wrapping this up, we've looked at Spotify and Roblox, two very different companies, both labeled breakout growth stocks. Spotify leveraging user conversion, premium subscriptions, AI for stickiness. Roblox focus on user engagement, bookings, and this massive creator economy. Distinct paths.
Exactly. And understanding those specific drivers, MAUs for Spotify, bookings, and creator payouts for Roblox, it gives you a much clearer picture than just looking at the stock price. It's kind of a shortcut to understanding what's really moving the needle for these companies in today's market.
Well said. It definitely moves beyond just the headlines. So maybe a final thought for you, the listener, to chew on. What do these stories, Spotify and Roblox, tell you about value creation today? Companies driven by metrics like user growth, creator payouts, AI integration, maybe before traditional profitability. How does that change how you might look at other potential investments? Something to think about.